Millions of Americans can't afford car insurance anymore. And I'm not talking about people with 10 DUIs and a street racing addiction. I'm talking about normal, responsible people. People with clean driving records, people who don't speed, and people who haven't had an accident in years. And yet, their premiums are climbing so aggressively that it's literally becoming a second car payment. Now, some of you are watching your car insurance bill jump from 100 a month to 200 to 300, and in certain parts of the country, it's getting even worse than that. And when you call the insurance company to ask why, well, you get hit with the most useless explanation of all time. Well, sir, rates are going up everywhere. Oh, thank you. What an incredible revelation. But here's what's scary. This isn't a temporary spike. This is a system-wide collapse that's making millions of people choose between paying for insurance or paying for groceries. And once enough people can't afford insurance anymore, well, something really dangerous happens. They cancel it and they start driving uninsured. And that creates a chain reaction that makes insurance even more expensive for the people who keep paying. So in today's video, I'm going to break down what's really happening behind the scenes, why car insurance suddenly got so expensive in America, and why insurers are raising prices so aggressively, and also what you can do to protect yourself from getting financially crushed. And you better stay until the end because I'm going to show you the hidden reason that your premium can skyrocket even if you've never been in an accident. And most people don't even know it exists until it wrecks them. Now, as always, just before we take a deep dive, it's imperative you hit that like button and subscribe so that you get notified the minute we produce another game-changing video that affects your choice of car and your finances. And I promise you'll appreciate it. So buckle up and let's plunge straight in. So let's start with the truth. Car insurance companies do not raise prices because they're bored. They raise prices because they're losing money. See, insurance is simple. They collect premiums and then they pay claims. Now, if payouts go up, then premiums go up. And right now, the cost of claims has exploded in every single direction at the exact same time. See, repairs cost more, medical costs cost more, car theft is up, weather disasters are up, lawsuits are bigger, and of course, the price of cars themselves is still high enough that insurance companies are paying out massive totals. So when you look at your bill and think, how is this real? Oh, it's real because the entire ecosystem around driving has become ridiculously expensive. Now, let's break down some of the biggest reasons. So back in the day, if you got into a minor crash, it was annoying, but hey, it wasn't catastrophic. A bumper, a headlight, maybe even paint. But today, well, cars aren't just cars. See, they're rolling computers with 47 sensors and an ego problem. That bumper, well, it isn't just plastic anymore. It might contain radar sensors, collision cameras, adaptive cruise control hardware, parking sensors, lane assist systems, and in some cases, a full recalibration process that costs more than the old bumper used to cost for the entire repair. So now, even a low-speed fender bender can cost $4,000, sometimes $6,000, and sometimes $8,000. And people ask, why is insurance so high? Well, because insurance companies used to pay hundreds for repairs, but now they're paying thousands. And this issue is multiplying across millions of claims. Now, next up is one of the biggest hidden reasons that rates are exploding. See, modern cars are getting totaled for damage that doesn't even look that severe. And here's why. A car is totaled when the cost to repair it gets close to the value of the vehicle. So say your car is worth $14,000 and the damage repair estimate comes back at $12,800. Well, the insurance company says, nope, total loss. Now, when a car is totaled, insurance companies don't just pay for repair parts, they pay for everything. And I'm talking about towing, storage, rental cars, admin fees, payout value. And because used car values rose dramatically over the last few years, well, that payout number has been massive. So insurance companies are sending out big checks all day long. And when insurers bleed money, guess what? They raise prices aggressively. Now, if vehicle repairs were the only problem, well, insurance wouldn't be this expensive. But hey, medical costs in America were already wild, and when you mix that with accidents, well, it becomes financial chaos. Even a minor crash can lead to ER visits, x-rays, CT scans, pain management, physical therapy, and specialists. And now that small accident becomes a $10,000 to $30,000 medical claim. In serious crashes, it could be $100,000 or even more. And that's why insurers aren't just pricing for repairs, they're pricing for medical events. And that's why some people feel like they're paying insane premiums even when they don't crash. See, you're paying for the system, not just yourself. Now, here's where things get controversial. One of the biggest reasons that premiums exploded is because claim payouts are getting hit with legal sledgehammers. See, there's an industry term called social inflation. It's basically the rise in lawsuit frequency and settlement size. Now that means, more legal advertising, more aggressive personal injury claims, bigger jury awards, and more nuclear verdicts. And of course, that forces insurance companies to increase reserves because insurance isn't just about what they paid yesterday, it's about what they might be forced to pay tomorrow. Meaning, even if you've never sued anyone, you're paying for the litigation environment that's around you. And this is where it starts becoming clear why millions of Americans can't afford insurance anymore, because the price increases aren't mild, they're structural. Now, in a second, I'm going to reveal the one factor that can absolutely crush your premium, even if you're a perfect driver, and most people don't even realize it's being used against them. But first, well, we have to talk about the vicious circle that is making everything worse. And I'm talking about uninsured drivers who are causing an insurance death spiral. Now, this is one of the most dangerous parts of the entire crisis. As insurance becomes too expensive, people cancel it, so they drive uninsured. Then when they hit someone, well, the victim's insurance pays. Now, through uninsured motor coverage, collision coverage medical. So the insured drivers subsidize the uninsured drivers. And of course, that raises premiums, which creates even more uninsured drivers, which again raises premiums. And that's why it's called a death spiral. And some states are already deep in it. So when you hear people say car insurance is unaffordable now, they're not exaggerating. See, in certain places, it's become a financial requirement that's approaching rent levels. Now, to add to the doom and gloom, car theft isn't just some random joyride problem anymore. See, in many areas, it's organized rings. Key fob relay attacks, part stripping, catalytic converter theft, cars disappearing overnight, and then you've got fraud on top of all that. Staged accidents, inflated injury claims, fake repair bills, even fake passengers. And insurance fraud is a tax on honest people. And when fraud rises, guess what? Premiums rise because insurers don't eat losses, they distribute them. And now on to the quiet killer that nobody ever expects, and I'm talking about extreme weather. Hailstorms totaling thousands of vehicles, flooding, hurricanes, wildfires. One major storm can generate tens of thousands of claims, and that's billions of dollars. And insurance companies respond in the next cycle by raising premiums broadly. So even if you've never had weather damage, even if you live nowhere near the storm, because insurance price risk across regions. Now, let's reveal what I promised earlier. The factor that can make your premium explode, even with perfect driving, and this part makes people really furious. And honestly, I totally understand why. Now, in many states, car insurance pricing is partly based on your credit profile using something called a credit based insurance score. Now, it's not exactly your FICO score, but it is a model based on your credit behaviors, utilization, late payments, collections, inquiries, credit history, meaning two people with the same driving record, the same car, the same zip code can pay wildly different premiums. Not because one drives worse, but because one has worse credit. So when people say I'm being punished even though I drive safely, in many cases they're actually right. And this is why improving credit is one of the most underrated ways to lower insurance long term. Because when your credit improves, your pricing will improve. So, what can you do about it? And let's make this practical. Because even though the system is broken, there are still ways to protect yourself. First, you can shop rates frequently. Loyalty does not pay, it punishes. Insurance companies often give better pricing to new customers than long term customers. So run quotes every renewal. Second, raise your deductible strategically. If you can afford a higher deductible, premiums can drop. Third, consider whether full coverage makes sense on an older vehicle. If your car is worth $4,000, full coverage may not be worth it. Fourth, remove unnecessary add-ons. See, policies are often padded. And fifth, this is important, improve your credit. Even small improvements can create long-term savings. And yes, this is where credit repair actually matters. Not gimmicks, not hacks, real correction of errors, cleanup of reports, and lowering of utilization. Because insurance pricing isn't just about how you drive, it's also about how the system labels your risk. So if you're sitting there thinking, why is car insurance suddenly so expensive? Now you know. It's not one reason, it's a perfect storm of financial pressure. Cars are too expensive to repair, cars get totaled faster than ever, medical costs are insane, lawsuits are bigger, uninsured drivers are rising, theft is rising, weather losses are rising, and credit based pricing is quietly punishing millions of people. And that's why millions of Americans are being priced out of something that used to be manageable. And that's why this situation is getting worse, not better. So now I want to hear from you. Comment below what you pay for car insurance right now, what car you drive, and what state you live in. Because I want to see which states are becoming the most unlivable. And if you want a follow-up video where I expose the worst states for car insurance and the smartest strategies that people are using to beat the system, do me a favor and tell me in the comments and I'll make it. And as always, hit that like button, subscribe, and I'll see you guys on the next one.